As markets move on-chain, TradFi and crypto markets are converging on Canton, the world's biggest institutions, highest quality assets, and on-chain innovators already here, the first public blockchain network with privacy. Every 2 weeks, we'll showcase the applications and use cases shaping the future of finance. The ecosystem is growing, new markets are forming, and this is just the beginning. Welcome to the Canton Buildcast, where new connections create new possibilities. This week, we delve into how Fiùtur's live platform on Canton is being used by major lenders and producers to bring together trusted on-chain data and the connectivity and distribution power of Canton to drive sustainable lending and investment across the energy economy. Let's see Fiùtur in action. Let's go.
Hi folks, and thanks for joining us once again for another Canton Buildcast, where every 2 weeks we show you the latest innovations in on-chain finance and the on-chain economy. I'm pumped about today's session because we're with the team from Fiùtur, and they're going to be telling us all about how they're laser focused on leveraging blockchain to really do well by doing good. They've been delivering the trusted on-chain data to support the energy transition economy. And we're going to look at how the team is solving really hard data problems and delivering the connective tissue to power more sustainable lending and investment across the whole energy economy. So Corinne, Dave, great to see you again. How are you both doing?
Yes, great to be here. Thank you, Ben.
Yeah, hi, Ben. Good to see you again. Thanks.
Thanks for joining us, guys. So Corinne, let's start with you. Your professional path has very much been trodden through banking and sustainable finance, really at big institutions and small. And what attracted you to Fiùtur? Tell us what you guys are doing that really meant you were solving the big problems that you were seeing in your career and that you're really addressing with DLT now.
Yes, thank you, Ben. So I joined Fiùtur 2 years ago. As you said, I have a banking and asset management background. I've always been at the client-facing stage of defining solutions, especially risk management solutions for clients. And I came to Fiùtur 2 years ago when I came to the realization that traditional finance, traditional data, and traditional technology were not going to be sufficient to help support the raising of funding for the transition economy. So before we go into the details as to what is the big problem we're resolving and how we're resolving it, I just wanted to define some terms for the audience, because when people talk about the energy transition, actually, we take a broad definition of this and we talk about the transformation of the economic system worldwide. And that includes concepts of energy efficiency. It includes concepts of circularity, adaptation of economic processes, climate adaptation for nature, all of which could be resulting in greenhouse gas reduction. So it's a number of concepts that we're capturing under the umbrella of economic transformation. And that is requiring a lot of money. So according to the Bloomberg new energy finance numbers that were published last year, we've already, as planet Earth, have already raised a couple of $1 trillion of money to finance that economic transformation. And that might seem to be very large, but in reality, it's a drop, because we need hundreds of trillions of dollars to finance the economic transformation. And if you're an investor and you're thinking, I would like to invest into the future economy, and I know it's going to be more sustainable, I'm all for it. What are the friction points that is preventing all of that capital from flowing into economic transformation? So basically, there are 2 points of frictions, and everybody knows about it. It's finding solutions to it that is difficult. The Loan Market Association actually published at the beginning of the year a number of reference points that are really helpful to understand the friction point. In March of this year, they published a survey of their members. So being the Loan Market Association, their members are banks and asset managers. And they ask, what is preventing you from deploying capital faster or more capital? And the number one constraint that 50% of all respondents pointed to is the difficulty to prove the impact of the assets that they are financing. They talked about the difficulty to justify the claims that they're making. And they would be very hesitant to make claims they cannot justify, because then you get caught into all kinds of regulations that would punish you if you have claims unjustified. So that's friction point number one that we resolve. We help to justify claims that are made by the financial industry on the impact of the assets that they're financing. So that's friction point number one. Friction point number two is much more practical. It has to do with the way the financial system is operating today. And that's fundamentally, it was best reflected, I think, in a working group that the LMA published. It is this month, actually, on the syndicated market trading settlement time. So they have a working group dedicated to that. They published that on average today, the settlement time for syndicated debt trading is 42 days, right? And so this tells you something, because syndicated loans are the prime instrument used to finance the economy transition because of the size of the loans involved. And if the trading of those loans takes 42 days to settle, then you know it's illiquid. And if it's illiquid, it's going to, by nature, repel a number of participants in the industry. And 42 days tells you there's a lot of risk, there's a lot of inefficiency, and there's a lot of cost associated to this. So friction point number two is, how can we justify claims, substantiate the claims? I think is the wording they're using in the LMA. How can you substantiate claims, but do it on a platform that allows you to have settlement times that is faster, reduce cost, reduce risk? And that's fundamentally the two friction points that Fiùtur resolves for.
It's the end-to-end efficiency gains that you'll get through new technologies. It's transforming these kind of legacy processes that have been around a long time, right, in lending. Recent reports have really shown, the rise of private credit, especially across the industries you talked about, manufacturing, industrials, oil and gas, really the industries that are most responsible for greenhouse gas emissions, right? So is there an opportunity, do you think, for lenders and corporates, given that perhaps private credit is less riddled with this legacy technology issue and infrastructure? Is that really the kind of the big opportunity? And what are the benefits you're seeing from people that are using the platform today?
Yeah, so from a corporate point of view, right, the borrowers, there are huge opportunities associated to being able to resolve those friction points. If you think about it, I would describe it as being able to capture a new value paradigm that is driven by transparency on new value being created through the economic transformation. So you can think of it as 4 quadrants, and it can be in any order depending on who you are and what you prioritize. But this new value paradigm that it basically means you extract more value out of the proven, verified sustainability attribute that you are realizing through the economic transformation process. So I would say the paradigm, a value proposition number one is that in many countries around the world, there has been an introduction of carbon tax and emission trading system. 53 countries around the world have those. These countries put a price on some of those attributes, like greenhouse gas. And when you have a price on greenhouse gas and you can verify emissions of greenhouse gas, then you can put a price on the value that you create through the sustainability process, through the transition process. And putting a price on it means you can then optimize it, you can mitigate it, you can monetize it. And that's value that if you didn't know, you wouldn't have been able to capture that financial value. So there's emergence of this appearing very quickly in countries that have implemented those mechanisms. So that's block number one of value. Block number two of value is that if you can justify the claims, as we said, it attracts more investors. And so attracting more investors makes your debt more appealing, makes it more liquid. And so by nature, it's going to help decrease your cost of debt. So that's value proposition number two. Value proposition number three has to do with the technology that we use. We standardize the process because through smart contract, what you do is that you have a systematic way of capturing attributes, the controls, the verification, the protocols, and so on. And that standardization creates liquidity because people know what they're buying, and as opposed to something that is always ad hoc. So value proposition number 3, through standardization, you increase liquidity. And then the value proposition number 4 is that since we are digitizing the verification of the claims, then we can create what we call smart IDs, which are referenceable attributes that can then be attached to any financial instrument issued digitally on the Canton Network. And that native issuance on the Canton Network reduces settlement time, definitively reduces from 42 days, and also decreases the cost because it has a lot less operational cost associated with it. So the combination of those 4 value blocks creates a new value paradigm because we have resolved those friction points.
I like that. You talked about the circular economy, and these 4 things kind of create that virtuous cycle. I really like it. A really compelling argument, Corinne. I think, Dave, we've had this, really clear story, clear business case. It is sometimes, I think, difficult to understand, how this all works for a user. How do you, because it's a multi-sided problem, right? You're bringing all this stuff together into one platform. We are here to see it in action. Can we get a demo from you? Tell us about what we're going to see.
Yeah, absolutely. Before we go into the demo, I think it's worth recognizing that this is, probably a new solution to the finance industry, but it's not a new problem to us at Fiùtur. We started working on this in 2022 when we started our journey with DA and DAML, and we built, I think, probably the first differentiated asset registry on DAML. And we really lent a lot of thought about, well, if you're going to put data on ledger, on a distributed ledger, how do you make sure that the quality and the accuracy of the data is correct from the ground truth upwards? So we really kind of solved a lot of these problems, back in 2022, 2023, and went live with in the natural gas space, and currently have greater than 500 BCF of natural gas kind of registered on our platform. So this notion of provenance, this notion of putting data through a workflow that ensures this accuracy that is provable, auditable, and traceable is something we've been working on for a long time. When we started Fiùtur, we realized that the application of that accuracy of the data had a lot of impact in the finance world. And if we can then roll that data up into, these things that we call outcomes, which are these key data points, these key targets, those targets can then get rolled into financial instruments such as transition loans and green bonds, and really kind of affect the economy from the finance going in. And this is the work that we've been doing, really with, it's been Canton that's been able to enable this kind of network of networks, we call it, that can really bring the finance world into the environmental and sustainable world. So I'd love to show you a demo of the prototype we've put together.
Let's do it.
Okay, excellent. So what we're looking at here is a proof of concept that we actually co-wrote with Digital Assets. And what we wanted to illustrate was how a completely tokenized Canton flow of a transition loan through to these KPIs that we call outcomes, and then all the way down to the ground truth, the actual data that came from the production facility or the sensors or whatever is supplying the raw data. And so what we're looking at here is essentially the bank node. So I am a major international bank, and I am loaning against transition loans. Transition loans are loans that are ratcheted based on performance of those KPIs that come from our system. So in this particular example, we're going to see a loan that assesses itself monthly, and if the production data, the methane intensity in this case, betters the OGCI benchmark, then the interest rate each month gets ratcheted down. And for every month they don't beat the OGCI benchmark, it stays at their base interest rate. So very simple. It's a bank with one loan here. So the important thing to consider when we're reviewing this demo is that we're seeing two Canton nodes talk to each other via the synchronizer. So as I navigate around the POC, we're not seeing any API interaction. There's no concept of a service user and tokens and logging on and using APIs. This is purely Canton and the synchronizer interacting. So if I drill down into this specific loan, what we've done in the POC to make it easy to understand is we've kind of grouped the data together. So in the first section here on this loan details, this is kind of the bank side of the house where the loan has a title and it has a description and it has an asset ID. This is the thing that the bank is financing. And you can see technical terms such as the party IDs and the ledger IDs on the distributed ledger. The interesting thing to note is this base interest rate and the interest rate ratchet and this interest rate formula, which basically says if we do better than that benchmark, then the interest rate will go down by 1.25% each time we assess. The next section is the section that's really interacting with futures node. And this is very important because the terms and concepts that are on the future node need to match the terms and concepts that are on the bank side of the house. So if the bank is financing an asset, and on the future side, we call that a project, those two need to be in alignment. And this is what Corinne was talking about earlier with this notion of smart IDs. These are referenceable IDs that span nodes in the Canton network and provide this governance that, in fact, the loan is referring to the same project, the same asset, this concept of an outcome definition, smart ID. This is the governance object that governs the KPI so that the KPI is consistent and has a defined methodology. Because remember, the term of this loan could span over 10 years, 15 years, 20 years. So we can't change our concept of what average means or what benchmarks mean. And then on our side, technically, we have a thing called a generator, which creates these outcome APIs, and these outcomes have data, and this is the target that the loan is looking for. So on this particular loan, we have assessed 3 months worth of interest rates, and you can see it in this table down here. And just quickly in the table, you can see that in the first 2 months, we bettered the benchmark and the period interest rate went down. And on the third month, the producer did not meet the benchmark standards. And so they got assessed at their usual interest rate. So let's drill down into that. So here is this smart ID again. This is the outcome smart ID. This is the smart contract on the future node that is holding the KPI. And the bank is fully enabled through the fine-grained privacy controls that Canton offers us to go look at that specific contract. So let's go down. And so now the bank has a view of, well, if I assessed this month to meet the benchmark, why? And now this is the first level of data that the bank is able to see. And we can see data around here of that backs up the initial KPI. So we can see what the measured quantity was and what the deviation was. Really, what the loan is really looking for is this absolute difference. And we can see it against a couple of different benchmarks. But it's the 2025 that this loan is being assessed against. But the real importance here is this block down the bottom, which is the verified data source. So the KPI is an aggregate, is a roll-up of a number of different production events. Those production events on our side are called DCUs, which are digital commodity units. And we can see that we've had 4 digital commodity units that went into this aggregation, and each one has a smart ID. This is the reference. This is the on-chain ledger reference to objects on our side. And so when I flip over to the future UX and drill down into the futures side of this story, I can see all of these DCUs that came in, and for each DCU, there is a whole number of attributes. And this provides the provenance, the ground truth of assessed data at the point of production that made its way through our system, through smart contracts on ledger, immutable, got rolled up all the way through to the outcomes that you see on the bank side, all tokenized, all on ledger. And so this provides really this complete transparency, complete immutability, and reliance for the banks to really move their business into the transition economy.
So we've really seen how you can, model the entire, loan there with that embedded, set of rules, automating the data to really drive that kind of automated outcomes, I guess, and that transparency and immutability across the ledger for the customers, for the bank, and I guess for reporting and all those other things as well, right, Dave? It kind of has downstream effects as well. Is that correct?
Yeah, I mean, to me, Canton is critical to how we do our business and to the success, really, of this initiative. Firstly, from a business perspective, I mean, it is the DLT that has the most number of bank participants, and is really set up for a highly regulated market, and it sets the stage for complete tokenization, right? Which I think we all agree has to happen for liquidity, for accuracy, for transparency, for provenance. But as a technologist, Canton is critical to me because I can interact with various participants on our networks, right? Whether they be data providers, satellite data providers, producers, finance, insurance, all kinds of sectors. We can interoperate with them with, minimal development time. We are, now not constrained by API contracts. We're not constrained by the traditional ways that computers talk to each other. So that means innovation goes faster, but more importantly, it goes more accurately, and we get a more reliable product.
Yeah, I think it's fantastic. You obviously thought very clearly from the beginning about the smart contract level, the data model, and then really thinking about that, the whole point of blockchain, which is distribution and having that connectivity across an ecosystem. So, really, really good to see you go on that journey and start where it makes sense to begin and then evolve over time. And maybe, Corinne, could you talk a little bit more about, what's possible in that kind of broader Canton Network ecosystem now? You talked about settlement, other financing workflows. I guess this is kind of how you start to think now, once you have the data model really strong, like what else you can do in a network like Canton today.
Yes, so we can imagine a world where you've priced and you can trade and you can trade with the investors and you can trade between banks, those sustainability attributes. And we're starting to see this because in a regulated market, I was mentioning carbon market, right? You already have registries that are forcing you to register verified attributes and that put a price on it. So if you interconnect the regulated component to a more voluntary component of trading those attributes between banks, between investors, the creation of liquidity, the transparency that the system provides allows an investor to say, well, I was all for investing into reduction of water usage, but really now I have too much reduction of water usage. I'd like to have more reduction of greenhouse gas as well. And you can then trade the attributes that you have in your portfolio against other attributes because you want to balance the environmental profile that you're aiming at, for instance. This type of technology allows you to do this. And that's something that is not possible today unless you actually do this in a very complex and expensive way. So it creates a lot of possibility for participants to then assess value and trade it and create liquidity in that market. And that's really what we're aiming at.
Cool. And Dave, are you looking at other assets, other things now that are available in the broader network, as you kind of look beyond just your walls and your initial ecosystem? What else? We talk a lot about on-chain conversions between kind of traditional markets, crypto markets. What are you seeing in that respect in terms of the innovation that you could bring to future?
Yeah, I think that's the next big challenge for us is to enable interoperability between different blockchain technologies, right? And traditionally, it's been a pretty clunky affair with strange bridging solutions and things like that. And I think what Canton can do is kind of simplify that model out, and I think that enables all kinds of interaction between, stable coins, for example, but just generally the interoperability of these smart contracts. And the thing that DAML provides is this kind of smart contracting at the application level logic, which is where we all live. And, we don't really live down at that transport layer of the cryptography of the blocks, right? We live up in the application world. And so that interoperability and being able to bridge between different networks, I think is critical. And I think it's the next big challenge, and I'm looking forward to solving that.
Well, we're really pleased you're solving those challenges with Canton and with the software stack from Digital Asset, and great journey that we've been on together. I'm really looking forward to see this grow and grow. Obviously, you have customers now using the platform and sharing data, so there's only one way from here. Where can people start to interact with Fiùtur and start to connect to the network? What's the path for getting started? Both just literally getting onto the network, but just contacting you guys. What's the best way to get in touch?
So the best place to find information on us to start with is our website, fiuturx.com. You can contact us through the generic email address sales@fiuturx.com. We are on LinkedIn, so you will find us on LinkedIn under the Fiùtur logo. We are also individually on LinkedIn conveying thought leadership. So we are expecting lots of feedback. We would love to interact with your audience, and we hope to innovate with them very soon.
I've learned a lot from your thought leadership on LinkedIn, Corinne. So I follow that avidly. You always have really good insights into what's going on. So you keep that coming, and keep developing, Dave. Keep bringing the innovation that you and the team bring. We'd love to have you back again another time. Thank you for a demo. It's always a challenge giving such a complicated demo and making it kind of seem simple and understand the value prop. So I think really, really appreciate you taking the time with us today.
Thank you, Ben.
Thanks, Ben. That was great. Thanks.
That's a wrap for this episode of the Canton Buildcast. Want to dive deeper? Check out the links below to learn more, connect to apt, or bring your assets and use cases to Canton. And don't forget to hit subscribe to stay on top of the latest apps and opportunities shaping institutional grade on-chain finance. Bye for now.